Bakkt completed the DTR acquisition and moved stablecoin settlement to the center of its strategy. Bakkt bets stablecoins frames the pressure because the deal gives Bakkt a clearer payments angle, but shareholders still need proof that the technology creates demand. The company issued 11,316,775 Class A shares at closing and may issue up to 725,592 more shares tied to warrants. The useful part is the test in front of the story, not a broad market slogan. Customer adoption and integration milestones will matter more than the closing announcement. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is the completed acquisition. Distributed Technologies Research brings stablecoin payment infrastructure, compliance tools, and an AI-native engine into Bakkt. The company wants to support faster digital payments and a 24/7 settlement layer for institutions and fintechs. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. Deal completion is not the same as revenue proof. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is stablecoins being used as settlement infrastructure rather than only trading assets. In plain English, a stablecoin rail can move value continuously instead of waiting on traditional correspondent banking windows. For Bakkt bet stablecoins, that mechanism matters because the acquisition attempts to connect regulated institutional infrastructure with faster digital money movement. The stress point is specific, whether clients actually shift settlement activity onto the combined platform. This is the part that makes the headline useful because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on Bakkt shareholders, institutions, fintechs, and stablecoin payment providers. The deal could strengthen Bakkt's payments identity after a difficult stretch that included a prior NYSE price warning. Bakkt stock fell earlier to $7.86 and later recovered to $8.62 by the market close in the supplied evidence. The practical consequence is the market is waiting to see whether the platform becomes used infrastructure. That is the viewer value here, understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is whether the DTR technology produces adoption and revenue growth. A completed acquisition does not prove institutions will use the settlement layer. That gap matters because payments infrastructure needs customers, compliance confidence, and operating reliability. The cleaner proof would be named customer wins, transaction volume, and integration updates. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is integration milestones, customer demand, and stablecoin settlement volume. Those signals show whether the acquisition becomes a business line or just a strategy reset. Bakkt bet stablecoins becomes easier to read if Bakkt announces institutional usage and working settlement volume. It weakens if integration updates stay vague and no customer traction appears. The final readout is simple. The deal is closed. Adoption is the real scorecard. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.